Okay, everybody, it is me, Gregory Mannarino. This is my post-market wrap-up on this, of course, lovely Monday, September 27, 2021. People, so what we're going to do now when I start off these video blogs is I'm going to begin using this new market indicator, the Mannarino Market Risk Indicator. Now that number stands, as I am doing this video, at 85.85, indicating low risk for the market. Now I have broken this down for all of you. In the description of this video is a link. I want you to click on that. It will tell you how this range works. I'll cover it briefly right here. Up to 100, low risk. 100 to 200, moderate risk. Above 200, high risk. And 300 and higher, extreme risk. All right? And that means, again, the higher this number goes, the more we have to consider our exposure to risk assets like stocks. You understand? It's very simple. The computation works. So I hope you all utilize this. But again, I will cover this every day. And right now we stand at 85.85. Check the link in the description of this video for any further information. Okay, with that said, stocks didn't do anything today. Kind of a mixed ending here. Okay, whatever. It's just lovely. Let me give you the specifics on this because I actually don't have them off the top of my head. So the Dow finished up 66 points. S&P 500 finished with a fractional loss. NASDAQ lost 0.52%. Gold about flat, slightly lower. Silver caught a bid. Crude oil, people doing very nicely. Very, very nicely. And it's going much higher. You know how crude oil works. It's the lifeblood of this market. If crude does not go up, the market don't go up either. I think it should be clear to you right now. Anyway, that's pretty much where we stand here. Cryptocurrencies remain under pressure. People, I would not be surprised. Understanding the crypto space, it is extremely volatile. If you cannot handle the swings, you should not be in that space, okay? I believe more pressure in the short run is highly likely with regard to cryptocurrencies. I don't care. These are long-term holds for me. I will continue to add to my positions. I have no intention of selling anything I own right now. So that's my take, and I believe most of you people who understand the crypto space also feel the same way as I do. We got to understand what we're doing and why we're doing it. I've told you this a million times. The same thing goes for precious metals. Believe me, people, I understand the frustration here. It's not real. The price action of gold and silver is not real. It's being pulled in every single direction by a mega bank. That's JP Morgan via the derivative, and they're not going to stop. Even if they get caught red-handed yet again, they're not going to stop. So use this to your advantage, in my view. Keep buying the dips. Keep understanding why you are holding these things for the long run. We're in a debt hyper bubble. So what do you want to do? Of course, you're going to, take advantage of this from every angle you can. You're going to be in the market. You're going to trade the market if you're so inclined. You're going to use the MMRI, the Mannarino Market Risk Indicator, to allow you to gauge where you should be putting your cash to work. Right now, it's clearly risk on, which means you should be looking at risk off assets as well. We got it covered from every angle, but you got to understand what you're doing and why you are doing it. It should be clear to you. All right. With that said, I want to talk about some interesting stuff that we found out. Now, we all do realize here, central banks are on a mission to inflate. They're not going to stop. Even if the Fed decides to taper, it's not going to make any difference at all. All right, it's a token thing trying to convey some kind of credibility. But the fact of the matter is, the Federal Reserve and other central banks are on a mission to continue to inflate, to continue to buy assets, to be the lender and buyer of last resort. So, understanding that, we heard from the European Central Bank. And the European Central Bank, it appears, is taking steps right now to be even more, are you ready for it? Accommodative. They love this word, accommodative. The market loves this word. Accommodative means the central bank's going to continue to buy it all. Now, although we're hearing the same narrative, this group of Fed presidents want to taper. This group says, oh, inflation is not high enough. You know, this back and forth thing is nonsense. It's, again, an illusion. It's a charade, a fantasy being played on people that are buying the nonsense, that the Federal Reserve really does care about what it is doing. No, the Fed has every intention to continue to keep inflating. So understanding that, if the European Central Bank is going to continue to ease, they're going to ease. Sounds kind of dirty to me. But they're going to keep easing. The Fed will keep easing as well. You understand? It's not going to stop. And even if a token taper were to happen, and I don't believe it will, I think the Fed's going to increase asset purchases. It won't make any difference at all whatsoever, and big fat zero. Now, we also, again, and I want to touch on this real quick. So Fed President Evans, we all understand, the man came out, and you can't make this stuff up if you try to, saying that there's not enough inflation. So what I want you to start to look out for, and how many times have I told you something before it happens and then it does? Okay, well, I'm going to let you in on a little secret here. Soon, you're going to start to hear the mainstream media being told to push a specific narrative. And you know what that narrative is going to be? Inflation is waning. It's cooling off. So that's the next thing they're going to start doing. Understand how people are programmed. Okay, they watch that box that they keep in their house. You know, they're called programs for a reason. They sit there to get programmed. So it's very simple. They're going to be uttered certain phrases and certain words that are going to register in their infantile minds. You understand? And they're going to believe, because they're being told right out of the program. Okay, they're getting programmed. They're getting told that inflation is waning when nothing could be further from the truth. Inflation is not waning. Inflation will continue to get worse, and another wave is coming. People, I just covered this recently on Friday. I did a whole video about this. A second wave of inflation is coming. But before that, they must convince you that inflation is waning. It's not waning. And look at this guy, Evans. There's not enough inflation. You can't make this stuff up. The easy money, people, is not going to stop. It can't stop. The nature of the beast is that more cash must be borrowed into existence exponentially just to maintain where we are right now. You're not supposed to know that, but that's the nature of the debt-based economic model. And everything you can think about and things you can't dream about will be done to keep that mechanism going. So be ready for it. Just be prepared. The debt is never, ever meant to be paid back. I want you to realize this too. The debt is only meant to be expanded on vastly as we move forward. You understand? I think you do. So I really want you to pay attention to the narrative soon. Inflation is waning. Inflation is cooling off. And expect the Federal Reserve to move goalposts. Like I told you, the bad economic news does not stop. It won't stop. We're going to get more bad economic news this week. Our economy, people, I'm going to keep repeating myself, and I want you to think about what I'm about to tell you. The economy of the United States is contracting. It's contracting at a very rapid pace. If you look at our debt to GDP ratio, it's out of control. Our economy is contracting as a percentage of GDP at its fastest pace ever. So consequently, you're going to see, parts of the economy continue to crumble. And of course, they're going to throw you these little things like, oh yeah, our manufacturing is doing better. But when you look at the data, you find out that it's all a lie. Manufacturing here in the United States is the dying industry here. Okay, and they're going to blame everything they can. Supply chain disruptions, COVID, blah, 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 whatever it is, to keep people distracted. But the fact of the matter is, the global economy is slowing down because central banks want it that way. Central banks are making sure it stays that way so they can finish their final solution, to own it all, to be the lender and buyer of last resort, to run it all. And that's what they're doing now. Central banks, the Federal Reserve, they are the government. Everything else, whatever you may think, it's all a shit show with brain dead people sitting behind the Resolute desk. It could be a farm animal. It doesn't matter. It could be people with bad complexions and funky hairdos going rah, rah, rah and tremendous. It don't matter who sits there. Okay, it's the banks running the show. Top, down, sideways, upside down, and backwards. Anything else is a distraction. Meant to keep the sheep in line. That's all it is. Nothing is what it seems. All right, people, look, I'm out of here. Very important video. Make sure you check the description of this video to find out more about the MMRI and how you should use this new indicator. Okay? That's it. I will see all of you, in the morning.